Good morning. I'm going to go over a couple options trades today for this week. Hopefully, you find it interesting. I'm going to talk about SoFi and Peloton, which are both companies I don't mind owning. And I'm going to go into some put selling and some call selling, see if you guys find it interesting. Good morning. My name is Adam Kahn, and I'm the Rational Investor. Today is Sunday, January 28th. I hope you're all enjoying the beautiful weather or wherever you are. Um, I'm actually in shorts today, which is super cool considering it's January. Anyway, before I get into these option strategies, if you could do me a favor, if you haven't already, and hit that subscribe button, even smash that like button, I really appreciate the support. It's super cool. I'm very excited to see how the channel's been growing. And as you guys know, because everybody talks about it, that helps YouTube's algorithm and other people find the channel. So as I talk about these option selling strategies, keep in mind that I picked these on purpose because they both have earnings coming out this week. I also picked them because they're companies that I don't mind owning. So if I use some of the strategies and I get assigned some of the stock, I'm okay with that. Now, keep in mind, this is not financial advice. You guys need to make your own decisions when it comes to your own finances and do what works for you. This is just something I'm sharing that's worked for me personally, and I'm just some guy on YouTube sharing that information. And that being said, really, it's not financial advice. There's risk to trading stock that a lot of us don't get into. I see some people that don't talk about it at all. You really have to be prepared to have these positions and be okay with it if the stock continues to move. Now, that being said, like I said, I picked SoFi and I picked Peloton because they both have earnings this week, on top of the fact that they're both inexpensive in terms of the share price, and they also both have good volatility or high volatility, which gets you a good premium to sell the options. What I like to do is have a small position of the stock, and then I like to sell both calls and puts so that no matter if I'm right or wrong about direction, I'm collecting time decay. I'm collecting some other things by being short the options. And I know that the stock can get really volatile because when the earnings come out, pretty much anything can happen. So SoFi closed at $7.70 on Friday. The positions I'm looking at is being long 200 shares. I'm looking at selling a total of 8 puts because I don't want to be longer more than 1,000 shares total if the stock goes lower, and then selling calls against the 200 shares that I'm long. What I'm looking at is selling two of the $8.50 call, and they closed at 40-cent bid at 41-cent offer. So if I'm selling two of those calls, I will get 40 cents per option, assuming it opens where it closed on Friday, which it may not. It could be either direction based on the price and the time decay, on top of when they announce the earnings. So if I get my 40 cents, that's $80 for selling the two calls. Now, I'm also looking to sell three of the $7.50 puts, which closed at 62 cents versus 63-cent offer. So if I get the 62 cents three times, that's $186 for those three puts. And if I sell three of the $7 puts, which were 37-cent bid, or five of those, forgive me. If I sell five of the $7 puts for 37 cents, that's another $185. So if I collect all that premium for selling the total of the 8 puts and the two calls, I get to keep $451 if those open at those prices and I hold it all the way through Friday's close. No matter what, that's my money. If the stock ends up closing below $7 a share, I will end up getting assigned 800 more shares. I'll have a total of 1,000 shares and have to decide what I want to do in the following week. If it closes below 750, I'll be but above $7, I'll be assigned 300 shares. I'll have a total of 500 shares and have to decide what to do from there. And if the stock goes higher but closes below $8.50, essentially I'll get to just keep the premium. Nothing will happen. I'll still have my 200 shares I originally had, and I'll have to decide what I want to do going forward from that. And if the stock goes above the $8.50, I'll be able to sell my shares, my 200 shares at the $850. I'll have collected the $451, and then I'll have made the money from 770 to 850 for the 200 shares that I held for that. So another $80 per 100. So another $160, making it a total of what's that? 450, 550, $610 profit. Your total risk of how much money you have to put out if the stock goes lower is $7,290. Well, the $451 is 6% return in 1 week. So if you could annualize that, which isn't a really fair thing to do because it's not realistic since earnings are coming out, but that's over 300% per year. Again, part of the reason I picked SoFi is even when it's not earnings dates, they tend to have good volatility, which gives a good premium in the options. For me personally, I'm comfortable if I have about a $7,300 investment in SoFi. So if the stock goes lower, I'll be okay with that position. Of course, if earnings come out terrible and it drops to $5 or $4 a share, I won't be thrilled about that, but I'll be okay owning 1,000 shares from higher, collecting the options premiums that I did, and handling from there what I need to do going further. Now, since I think I mentioned SoFi is a company I want to own, I do have a tiny bit that I've put away and put in the safe deposit box completely separate from trading the options. Because if they come out with great earnings and blow through it and the thing's at $10 a share or whatever it is, I still want to make sure I own some of SoFi company because I like them as a company. Now, Peloton has earnings coming out February 1st, which is causing the same thing. Their volatility is a good bit higher right now. And similarly, I don't want to have more than 1,000 shares, but for this one, they closed at $5.75. I have 400 shares of Peloton. Since I don't really want more than 1,000, I'm comfortable selling a total of 6 puts. And just so everybody understands, when you sell puts, if the stock goes lower, you're committing to buy the stock at the strike price of the puts that you're selling. So with SoFi, I was looking at the 550 put and the $5 put. If I sell three of the 550 put, they closed at 32 cents. That's $96. And the $5 puts are 14 cents, which would be $42. I know that may not sound like a lot of money, but keep in mind the stock is only $5.75. So as a percentage, it's a legitimate return on your investment. Since I have 400 shares of the stock already, I'm comfortable selling two of the calls at $6 and two of the calls at $6.50. The $6 one is a little bit tight of a spread. I'm only going to make 25 cents on the shares if it goes higher, but I'm okay. It's getting 39 cents was where it closed on Friday for the $6 calls, which is $78 return on that. And then the other $25, another $50 since I have 200 shares I'd be selling there. Then for the two calls at $6.50, it's 23 cents bid on Friday. So that's another $46 you could collect for selling a total of those four options. In total, for all 10 options, 3, 6, 7, 8, 9, 10 options, sorry, had to double check. You get $262 that you get to keep so long as you don't do anything by the close on Friday. Your total risk of money put out of pocket is $5,450. Now that means that's how much you need in your account in case Peloton closes below $5 a share by Friday. You'd be assigned an additional 600 shares, 300 of them at $5.50 and 300 of them at $5. The $262 that you get to keep off of $5,450 is 4.8% return in 1 week. To me, that's incredible return on 1 week for something you're just collecting. Now, if the stock goes below $5, like I said, you would now have a total of 1,000 shares that you would have to then adjust to and decide what calls you want to sell or what you want to do moving forward with those shares. If it closes between $5 and $5.50, you'll be assigned the 300 shares at $5.50. You'd now have a total of 700 shares and need to decide what you wanted to do with those calls or what you want to do with those shares going forward. If the stock closes between $5.50 and $6, you'll have the 400 shares still that you had prior to the earnings announcement and get to keep all the premium of everything that you sold and make your decision from there. If it closes between $6 and $6.50, you'll still have 200 shares left and need to decide what you want to do, if you want to sell more puts going forward, if you want to sell additional calls, and how you want to handle that. And again, if it closes above the 650, you've collected all the premium. You committed to selling 200 shares at $6, so you made $50 for those, and you've committed to sell another 200 shares at 650, so you've collected another $150 on that. So you're at $462 in total profit on that trade. Now, with options, especially weekly ones, you have to constantly be readjusting and deciding what you want to do in terms of your trades. This is an example of the wheel strategy that people talk about. I call it or somebody else even called it the same thing. It's a covered strangle. I'm long the stock, I'm selling the calls against it. I'm also selling the puts to collect additional premium, but I'm okay accepting the stock if the stock goes lower. You have to make sure you're doing this with companies that you're comfortable owning the stock, because you can have things like what happened with Tesla, where it drops an awful lot on earnings day. And if you're short puts, you are taking on the downside risk. So you have to be careful in understanding that if it goes lower, I own the stock and I'm okay with that position. So you have to understand that. And these stocks, despite their price, they could go to zero. That is a possibility that you have to keep in mind when trading them. Again, what I like is they tend not to, as of late, they don't move a whole lot. And you get to collect a lot of premium because they're volatile at the same time. People get excited, like I love SoFi, I think they're a good company, but I don't know if and when they're going higher. And in total, I know I'm not putting out more than $15,000 in total, no matter what happens with both of the stocks. If they have bad earnings and the stocks both go way lower. Another one I do these types of trade on is Rivian, because I find it has good volatility as well, and it's a stock I don't mind owning either. Now, I didn't do it as an example today. I think they have earnings coming out in a few weeks. Maybe we'll look at it as it gets closer to earnings. But I thought these were two stocks that looked attractive to me right now in terms of selling options. I find that generally buying options is not the best strategy, and I like to be the person who sells options. You just have to be careful. You have to start paying attention to it, and you really have to learn a little bit about it. I see some YouTubers talking about it like it's free money. It's not really free money. Markets move and stocks go up and down, and you have to adjust with it. It's a way to collect some premium on a stock, but if you're selling calls, you are limiting your upside gains. And if you're selling puts, you have unlimited risk to the downside outside of it going to zero, which people who talk about selling options often avoid that discussion. They just talk about it like, oh, you collect these premiums, you sell puts, it's free money, and if you get assigned the stock, all you have to do is sell the calls against it, and when it goes higher, you get that free money, and you've made all this money. That's true if it works out that perfectly, but as you'll see if you start trading options a bit, things don't work as perfectly as people expect them to. And sometimes they do, but when they don't, you have to be able to maneuver and adjust and handle it accordingly. I suggest, now again, this is not financial advice. I suggest if you start delving into options, you do it with a very small percentage of your portfolio just to get comfortable with it and start understanding it. I wouldn't suggest doing it with a large percentage to gain a ton of money like it's sometimes sold as. Anyway, have a great Sunday. I'm sure I'll talk to you guys tomorrow or Tuesday. Off to swimming for my son's swim team. So, again, thumbs up, woohoo, like, subscribe, make some comments. Let me know how your day is going. Bye bye.